Now, before we get into the method itself, I think it's really, really important for us to, I just really want to impress upon you that there were certain keys to Darvas' success. I mean, having a good system that works, of course, is important. It's critical. But the keys to Darvas' fortunes were the way that he approached his trading and the manner in which he conducted his trading. And one of the really excellent things that Darvas did was he would find and pursue what worked. And if he found out that it didn't work, he was quick to stop investing time in that particular effort. He didn't feel that, hey, this should work, so I'm just going to stay after it until I make it work, or I hope that it eventually comes around. He would try something for a while. He was open-minded, and he was willing to learn. But if it didn't work, he bagged it. He was quick to bag it and move on to finding something that did work. Now, what he found through his trial and error in his early days as a trader is that, yes, the valuations, the opinions, and the Wall Street sayings were not what worked. He learned to only trust his own observations, research into both the markets, the way things work, the way various methods were set up. I mean, all his own research, and of course his own reasoning. I mean, things had to make sense for him. And above all, he wanted to work with facts. He just really did not, like I said, care for or want to rely on opinions or evaluations, having other people making his decisions for him. Now, here's the other thing that really is critical, and for anybody who's planning on being a trader long term, yes, studying both the markets, how things work in general, and then also specific methods, and then practicing. Darvas made it a specific point to practice when he had the opportunity, practicing his system and his method, to really get it refined, to make sure that he understood it well, he knew it inside and out, and most of all, to get good at it. I mean, that was really huge. And the other thing that he did that was very smart is he didn't just have a set of rules for his trading system, for the box method itself. He wrote rules for anything that affected his trading. I mean, for example, he found that when he spent too much time in conversation with his broker, that he was getting a lot of information that would influence his decision-making and how he approached his trading. And so he just set it as a rule for himself that he was not going to get on the phone with his brokers. He was not going to go to the broker's offices. That was just a rule. He understood that he was, susceptible to the influence of other people. If somebody runs across a hot tip and they'd be all, fired up about it. He found that he was susceptible to getting caught up in all that. And so he made it as a rule, and he wrote it down that he would not go into his broker's office. He was not going to have phone calls with them. That was just a rule of his. He knew his own personal limitation. One of his other limits that he learned, and it was good that he recognized it quickly, was when he, through his disappointments before he developed his method, and he was on his quest to find something that worked, he did delve briefly into the unlisted stocks. And he was very quick to find out that, hey, yeah, it was way outside his limits. That area was really for experts only, so he got back to what he knew. So recognizing his own personal susceptibilities and the fact that he's human and that he has limitations, he recognized that, and that really served him well. And again, he took action on what he learned. That's another thing that was really key. He didn't just learn a lesson and then keep making the mistake over and over again, hoping that his results would change and how things were working out. He learned his lessons and he acted on those lessons, and that was really, really huge. I mean, it's just, the phrase is, it's just common sense, but it really is one of the reasons that he was able to make the fortune that he did, is because he acted upon it. Now, the other thing, and this was really Darvas's driving quest, was to have a reliable and repeatable method. That was his main qualm with the valuations and opinions, is that they weren't reliable. And of course, if you're getting your recommendations from somebody else, the repeatability of that is always going to be questionable at best. Now, one of the other things that Darvas learned, and this was really good, is even though he had a good system and he knew it worked, he also learned to pay attention to the general market mood. And that's why after a while, when he saw that things were getting a little weird on him, and his stocks were not behaving the way he thought, and it was a general thing, he started asking for the Dow Jones average. This is when he was traveling, and that way he could keep an eye on the general market mood so that it would give context to the information that he was getting, because he was only asking for very limited information. That's all he wanted, because that's what he knew was all he needed for his method. But he also needed that market mood information to let him know, if things were not going as expected, why. And the Dow Jones average was very helpful with that. And most of all, and this was really another one that it just really shows how smart of a trader he was, and just in general, when the bear market hit in the mid-50s, he was smart enough to just realize, he'd gotten stopped out of all his trades. He had no positions open. His portfolio was empty. And he was looking at the conditions, and he said, all right, well, I'm not going to just get in to keep busy and keep trading. I'll take a break until I have reason to think that it's a smart idea to get back in. So he always came back to smart business decisions.